Hello, aloha. This is Pablo Heyman coming at you, answering some important questions with market analysis about Bitcoin, stock market, and where the world is going economically. So without further ado, we'll jump straight into the charts. Now, just to say that, first of all, this video is going out to my Discord members first, and then basically I will be listing it on the internet after, on social media after, say, a few days or so. So first of all, I'm sure everyone wants to know where is Bitcoin going. Now, here's a chart of, we're mainly trying to answer the question of inflation. So basically, when inflation is this high, what's going to happen to basically to Bitcoin and the stock market? Okay. And because this is an important time in the markets, we're going to look at how tightening. Everyone's been talking about inflation and how the Fed is going to tighten. We're going to look at how the Fed will tighten and how that actually affects both Bitcoin and the stock market. Now, basically, first of all, we're going to be looking at stocks first, because stocks are actually what they call risk assets. What that means is basically that, it reflects where Bitcoin's going to go, because they're both risk assets. Now, here we are. First of all, I can see why some people have said, just because interest rates are about to go up doesn't mean the market is going down. And they're quite right. So we can see here in 2003, 2004, here's this blue line is interest rates. And as the light blue line is rising, we're actually at this moment right now, right here. Because this is 2004 as interest rates are just about to rise. Now on Wednesday or March 16th, interest rates are also just about to rise. So as it starts rising, basically we will, the market instead of going down actually went up. So this is stocks, but keep in mind that SP 500, but keep in mind that Bitcoin and the stocks have somewhat of a strong correlation because they're all seen as risk assets. Now see here, this is kind of similar to what's happening right now. As interest rates bottomed out and it's about to turn up, then stocks sold off, and then they're about to, but buy on rumor, sell on news. As the rates actually started going up, people said there's not so much to fear, so stocks actually went up after that. Now, we'll take another example. Now, of course, 2008, everything crashed. Here's another one. This yellow line is the inflation, by the way. Now, we might notice after 2008, this purple line, which has been hiding down here, suddenly just popped up like an extraordinary parabolic rise, and then just kept on going up, 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 and up. What is this purple line? This purple line is actually what's called the Federal Reserve asset balance. In other words, it's how much money the Federal Reserve has printed. What that means is basically the Federal Reserve buys a lot of bonds, what they call QE, or quantitative easing. See, the Federal Reserve buys all these bonds off the markets, but what do you use to buy bonds? To buy trillions of dollars of bonds, 9 trillion they've bought. Well, you use money, because when they give you bonds, you're giving the banks and the insurance companies money, right? That's how it works. So basically, where does the Federal Reserve get that $9 trillion from? It doesn't have it. So it's basically what they call printing. That's what they call printing of money. So as we can see, it basically just jumped up to here around 2008. That was to save the market from the GFC. And now, look, and once again, it just kept on, we followed that purple line, it just kept on printing more and more and more. Okay, now let's get to 2018 here. So basically, as we can see here, around 2015, late 2015, the Federal Reserve decided to hike interest rates again, and we can see this blue line here going a lot higher. Now, that's actually basically, once again, see, it was going flat. It went flat. There was no rate rises for like 6 years. For 6 years, the green or the blue line was going flat. And then basically, see the yellow line, as inflation started coming up, the Fed said, we got to raise rates. And when it was just about to raise rates, this is kind of where we are right now, you again see stock market tanking once, tanking twice, and then as interest rates rose, stock market went up, right? So that's why there are a lot of voices and commentators in the markets right now saying, do not fear, do not be scared. Just because there are rising interest rates about to come, it doesn't mean the market is going down. If stocks are going up, chances are Bitcoin and crypto are going up as well, because they're all seen as risk assets. Now, so they do have a point. I must say they do have a point. However, they have overlooked something. And they're comparing to, say, 2014. They're comparing to, say, 2008, as we have just shown you, as interest rates go up. First, stock markets and, risk assets such as Bitcoin sell off a little bit, like we're seeing here. And that's called buy on rumor, sell on fact. But when the actual raising actually starts happening, stock market's like, that's already been discounted, so stock markets go up. They're right about that. But, however, there's something they're overlooking, and that is, do you see that yellow line here? That's the inflation rate. It used to be around 2.5%. Now we all know it is at 8%, and that's February inflation. That is even before, Russia has actually started the war, and basically, before oil prices and before petrol, wheat and gas prices, before everything shot up through the roof and caused all that much inflation. So I'm thinking CPI inflation could come out to be over 10%, like 11, 12% in the next month or two. So here's the thing. What they're not looking at is basically this thing here called see the purple line here? This purple line here is what they call QT, or quantitative tightening. Now, this is the most recent example, most significant example. Stock markets, as we said, only corrected a little bit and then kept on going back up. But see this line, as soon as it started going down, markets started going down, right? Stocks started going down, and I will find Bitcoin for you as well. Let's see if we can pull up Bitcoin on this chart. And the SP 500 actually went into a bear market. So basically, which one is Bitcoin? It's also this color. Okay. Okay, see here. 2018. Okay, this is Bitcoin. So as we see inflation going up, we saw interest rates started rising, and the Fed's like, we're tightening. So they started QTing. Rather than QE, this is called QT. See the purple line going down? What that means is, rather than Fed giving the market money and buying bonds, it's saying we're selling bonds or letting their maturities run off. It's a bit of a technicality, which means you are actually giving us money now, right? So the Fed is, rather than pumping money, it's actually taking money out of the market. And what happens, this purple line here, I'll make it easier to see, is actually what happened with Bitcoin price. Now, Bitcoin price actually went, I'll change it to, say, red for now. So we see, look at the red. So look at this. As soon as QT started happening, as soon as QT started going down, or Fed withdrawing money, doing the opposite of printing money, Bitcoin went from a high of, this is around $10,000 per Bitcoin, down to here, around 4,800. Below 5,000, around $4,000 per Bitcoin. So that's like a 55 to 60% decline in Bitcoin. And so what I'm trying to say is, this time maybe what we need to take into account is this QT. When does that start? Right? Once QT starts, you see Bitcoin just drops like a stone, right? Just drops like a stone. That's the entire 2020 bull run just ended. So QT is going to be a very significant factor, and I think it's being overlooked. Now, in my next video, I'm going to look at the 1970s, where inflation was this high, because it's pointless to compare to the last 20-25 years, because there hasn't been much inflation. Now, we're going to compare in the next video to the 70s, where there's going to be a lot of inflation, where there's some more QT. There are actually 6-7 times in history of Bitcoin, of United States QT has happened, and each time it's been very significant impact on the markets. This is something you don't want to miss, so join me for part 2 of this video. So for now, the conclusion is basically the market has a point when it says, a lot of the commentators have a point when they say, okay, yes, Bitcoin and risk assets such as crypto and stock market tends to rise when interest rates rise. Right now, it's just a little bit of a scare, a little bit of sell off. But however, they're not counting on the fact that QT is coming. Also, not only that, we're now at 7% inflation. So how will those two factors, so I obviously have a different conclusion to all of them. And I don't think it's as simple as that. I'm not as optimistic as they are, but I could be wrong. So to get to the right conclusion, we're going to examine the 70s. We're going to examine what QT does to asset prices, risk asset prices such as Bitcoin and crypto and stocks. Okay, join me for part 2 of this video. We'll find out what will happen to Bitcoin and stock market and all crypto in the next 12 months or so. Okay, bye guys.